Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Hi, Will. How are you today?
I'm doing pretty well. It's a nice day. Trying to still kind of work off some of that lethargicness from Thanksgiving, eating all that food. So hopefully, you're feeling good.
You've come out of your coma, is what you're telling me.
Yep. I feel like a bear emerging from a cave in the spring.
Yeah, I love Thanksgiving. It's a wonderful holiday. Good food, good family time. It's a great time.
Exactly. So, looking at the markets, as we come out of the holiday week into this new week, where are we sitting currently?
Yeah, sure can. And we saw some pressure in the markets last week, just heading into that shortened week, if you will. So a little bit of a rebound this week. December corn up 11 cents to 6.68. January soybeans up 17 to 14.57. Soybean oil for January was up to a little over 2 cents per pound. Soybean meal was up $3.70 per short ton to $411. Old crop wheat was down 62 cents to $7.56, and new crop July wheat down 57 to 7.97. And then that West Texas intermediate oil down $7.50 per barrel, trading just above $77. It should probably be noted that those energy complexes really have pulled back here the last couple of weeks.
All right, so some adjustments there. What's really been leading the way on these markets coming out of again that holiday shortened week?
Yeah, good question. I'm gonna start off right there on the energy side. So U.S. gasoline consumption was down the week ahead of Thanksgiving, increasing all liquid fuel energy stocks, including ethanol. U.S. ethanol production increased 9 million gallons week over week. U.S. export sales were nearly 4 times what we've been seeing for corn as of late, while soybeans were about a fourth of what we've been reporting the last couple of weeks. So a little bit of a difference there. Grain, sorghum, and cotton were down week over week, while wheat and rice were up. On the corn side, Mexico made a strong purchase of new marketing year corn last week, along with a big purchase of old crop corn. Open interest futures and option positions of Chicago wheat and soybeans were marginally up week over week, while corn saw a 5% decrease in open interest positions, nearly identical to last week's moves in all those markets. Money managers continue to sell off of net long positions of corn and soybeans while buying back positions against the net short positions in Chicago wheat. Weekly U.S. grain export inspections were down week over week for corn, soybeans, grain, sorghum, and wheat. Everything was within expectations. The composite conditions for U.S. winter wheat continue to deteriorate and remain at historical lows. And then finally, in global news, protests erupted in China over the week, pushing it back against renewed lockdowns and their coronavirus zero tolerance policy. And then Argentina has restarted its soy dollar program to encourage year-end exports of soybeans or delivery of soybeans to the market and strengthen the central bank's reserves.
So a lot of factors going on right there, but really I want to just touch base on that Mexico trade discussion right there that you brought up. So this past week, nearly 70% of exported corn went to Mexico from the U.S. And really that kind of leads into, I think, today's overall topic, discussing the future of trade between the U.S. and Mexico when it comes to corn, specifically on GM products, genetically modified products. There's been, I guess, challenges laid down, the gauntlet thrown down a little bit on both sides. Mexico trying to institute a ban on GM corn imports by 2024, and obviously that ruffles the feathers in the United States. So before we really dive into it, what's the current situation that how you see it? But what are what's the path forward from here that we might see between the two countries?
Yeah, good questions there. And I think it should be first mentioned that Mexico is a major partner in especially corn trade. They traditionally are number one buyer of U.S. corn, although in 2021 China emerged as the top destination for U.S. corn. So Mexico is a major partner when we think about some of our ag commodities. Pork would be another staple that really depends on Mexico. To your specific question about, what's the current situation? This is really a continuation of our current U.S. trade philosophy, if you will, or trade platform. of strong arming positions. And this is something that started really in the Trump administration and then has carried forth into the Biden administration of laying down positions and threatening barriers to product. We saw this with the Chinese back in 2018. We're seeing it again with some other countries as well. And really, this kind of started a little bit when Mexico announced some ban of GM corn products. But yeah, in terms of your basic question, this is a continuation of our current trade philosophy.
Well, and really looking at the situation, so Ag Secretary Tom Vilsack was in discussions recently with Mexico's president, Andres Obrador. I'm sure I'm not 100% pronouncing that correctly. But looking at the discussion, really the theme that was kind of laid down, and of course, there's delicate language used, but Vilsack pretty much said that if Mexico proceeds with its GM ban, that the legal action will be pursued by the United States in breach of USMCA. So what type of legal action can be taken? What might that look like, and what would the repercussions from that be?
Yeah, good question. So I probably don't know all the everything that's on the table. It's hard for me to imagine there's a lot of tools available within like the World Trade Organization judicial system. That's kind of a defunct body right now that has been kind of having issues for decades now. Nearly 2 decades. So it's hard for me to imagine a judicial process outcome here. But in terms of legal threat, I wouldn't be surprised if we didn't see an increase in tariffs of Mexico products coming into the United States. That has followed all the paths that we've seen the last couple of years, and language that has been repeated here in the Biden administration. So that would probably be the legal aspect. I wouldn't call that legal, but that would be my anticipation.
Well, it is kind of interesting too, because I feel like these discussions as they stand right now aren't actually, they don't have an impact on the market yet, because how could they, right? There's so much uncertainty and so many things to play out from now until 2024 that, it's almost impossible to factor in a whole year of 2023 of what could happen. But at what point do you think these discussions, if they continue to be ongoing, start to impact maybe the corn futures and things like that?
Yeah, sure. I think you saw some movement in the deferred corn contracts when Mexico kind of started to ease a little bit of their talk around banning GMO corn, especially in the feed use sector. I think some of those deferred contracts probably gained a little bit of a momentum as related to that. So, headlines here certainly do play. As far as if we would see a major impact, it would be, actually, some type of market trade, limiting factor that comes up, like a tariff or imposition of a tariff rate quota, potentially where a certain amount of product goes into the country before tariffs start to come into play. It could be an export ban, which we don't use those here in the United States, and so I don't anticipate that to be the case. But certainly, it would be on the table as well.
Well, and just talking about an export ban being on the table, not likely, but something that could at least pop up within discussion. Does a dispute over USMCA really seem to begin over energy discussions between the U.S. and Mexico? So could corn be more of a pawn here in these discussions, with maybe Mexico trying to gain some leverage on discussions on other fronts?
Yeah, good question. And I think you correctly bridged that. I don't know if you realized how just delicately you put that there. So that was nice. Kudos to you. So you asked the question, or you raised this question about energy. Mexico is the dominant source, or our export for oil. And that's what's causing diesel prices here in the United States to be so high. As our exports of diesel fuel, most of that's going to Mexico. And you've started to hear people start to talk about export bans of oil products. It's in the context of export bans because of Russia and OPEC and stuff, but it's really what we're talking about is an export ban against Mexico. And now you're throwing this corn thing into the mix as well, which is, again, that was a nice way of putting that. I don't know the answer. Export bans are not a policy tool of the United States. We have not used those. Truthfully, I have heard nothing about them for most of my life. And then just here in the last month or so, you start hearing rumblings about as a way to control diesel fuel. Well, does that spill over into this corn market as well as a negotiating tactic with Mexico? I don't know. I don't anticipate export bans being a tool used in this case, but certainly there's been more chatter um, popping up here as of late.
Well, just talking about diesel, like you were, that kind of brings to mind a recent chart that you shared on Twitter showing the big split between gas and diesel prices, and this is maybe one of the. I think this might be the most split the two markets have been, according to that graph, if I remember correctly.
Yeah, no, that actually popped up. That was a question. I was fueling up for gas just west of Columbia, and I looked up at the sign, and the diesel retail price was $2 more than the retail gasoline price. And I in my lifetime, I had never seen that. I didn't think, and so I went and pulled the data, and sure enough, that's an all-time record, at least in terms of national retail, diesel relative to gas. It raises this question of why they're operating so differently, and I think some people probably jump quickly to talk about political pressures of lowering gas prices ahead of the election and letting diesel prices run high. I have to believe that from a market standpoint, the global market is just hungry for diesel fuel, and the U.S. is exporting into that market because we don't have export controls. And so we are seeing very strong diesel prices here in the United States, and that's contributing to the transportation cost of goods and relaying into price pressure experienced by consumers.
Well, and really looking back at the U.S.-Mexico issue, if there isn't a resolution found and Mexico goes ahead with their genetically modified ban in 2024, where do they get that product? What areas can they really pick up non-GM corn from? I mean, would they look at to really boost imports from Brazil or other South American countries?
Well, I think their hope is that U.S. producers would start to take advantage of the premium that would be associated with it, and start growing more non-GMO corn. I think is kind of the message they were signaling is we're willing to pay for it. The prices are gonna they weren't giving a government subsidy. What they were doing is they were imposing a limit in the trade, which would cause demand for the product within the country to shoot prices up high enough that would send the signal to producers around the world to grow it. So it was kind of it was a government intervention is kind of the idea here, but they were really banking on those higher prices and spurring more production of the product. And I think to some extent they were hoping U.S. producers would be willing to do that. I think the message from at least central U.S. producers has been, hey, no, let us do what we do. This is a safe product. And continue to let us produce this corn because it works in our management strategies to export. So an interesting tactic. If they go through with it, it'll be interesting to see where they get the product and who around the globe steps up to produce it. I do anticipate a good chunk of it will come from the United States. High prices tend to help encourage movement or changes in management decisions, management practices.
Well, and this is just speculation on my part, but what I thought was interesting, a lot of the comments that seem to be coming from Mexico's side of the table was that their concerns lied in GM seeds contaminating native varieties that they already had, right? Which, which is outside of the health concern that some consumers might have of consuming those products. But if that's the case, it seems odd to me that Mexico is currently already importing such large amounts as needed, but that's not an active concern of, oh, we're contaminating our own products as we're doing this. It just seems like there's a disconnect, but that's just speculation on my part. I don't know. So really going forward, obviously I feel like these talks are going to be going on for quite a while. It's not like we're going to find a resolution before the end of this calendar year. If we do, they'll be very surprised. So what's maybe the next couple steps forward? What might be the outlook?
Yeah, so I anticipate some pretty strong discussion, some pretty strong language to come out. Again, the strong arming by both sides, right? This is just kind of the new trade mechanism in the globe right now that really started about 4 or 5 years ago and has really picked up momentum. And I expect that to be the dominating force until somebody follows through on and does it per se, or tensions ease. That's what I see moving forward. So a long drawn out process to this. I think the one thing I probably can say is that, Twitter probably won't be as big of a factor in terms of breaking news this go around as it was last time.
All right, Ben, always great insight coming out of you and the entire FAPRI University of Missouri office there. So looking ahead to the rest of this week, what reports, what factors should farmers really be watching?
Yeah, so it's nice to be back to a normal week after the holiday week. So we got our normal set of reports coming out this week, but then on Thursday, December 1st, that first of the month, we get some key reports about grain and oilseed usage. So those grain crushing reports and oilseed processors reports come out at 2 o'clock Central Time on Thursday.
All right, so something definitely to be paying attention to there. Thank you for joining us today. If you'd like to learn more about what we do or see more of our content, you can check us out at brownfieldagnews.com. Also, check out our sister program, the weekly livestock market update with Brownfield's Megan Grebner and the University of Missouri's Scott Brown. Ben, again, thank you. I appreciate it so much. I'm Will Robinson on Brownfield.